Welcome back to the Comstock channel. My name is Brian Hendrickson. It is Friday, which means we have Eric on to do the weekly wrap-up. Welcome.
Yeah, thanks for having me, Brian. How you doing today?
I'm doing good. How are you?
Well, ready to get this one over with, that's for sure.
I will say, in our notes, we kind of share notes so we can talk about what's going on. You have sucked in all uppercase.
Yeah.
So not a pretty week.
No, and of course in that I was referencing the weekly export sales because they came out a day late, so we just got them this morning, and it did nothing to help us, and maybe we had high hopes for that, but on a holiday week, you can't expect a whole lot. So that set the tone for the day, which just went right along with what we saw all week, and we end up closing the March corn 10.5 cents lower for the week at 460 and 3/4, and that's on a holiday shortened week. So we lose 10.5 cents in 4 sessions. Not a great feel to start the year. We should be hitting some technical support pretty close to the levels where we're trading now. Look at this continuation chart on the corn, and where you see that big gap on the chart back in December. That's where the December contract expired and the March became the front month. And so there at the tail end of that, you see that gap could serve as support. That would get us down to about 456. We're within a nickel of that spot right now. So that would be a first objective. Then you go to the low that we saw in the December contract back in November, and that would have been at 447. So one of those two should hold this market short term from a technical standpoint. Fundamentally, we've seen a little improvement on one side and a little worse on the other. So ethanol grind has been exceptional, and the demand for ethanol has increased 6% year over year. And that's compared to an expectation by the USDA of an increase of 2.9%. So there's, tens of millions of bushels additional demand if we maintain that pace through the marketing year. So that's definitely good. And with this bump up in crude oil prices that we've seen over the past week or so, that's definitely increased the profitability for the ethanol plants and got them a little more aggressive in the market. So definitely a good thing there. But then you go to the weekly export sales, don't even make the low end of expectations, marketing year low on that front, no daily announcements. And this, while we've had a dollar that's been in a broader downtrending mode, should be making U.S. goods more attractive, and we still can't spark any interest. So it'll be interesting to see how the exports go for a little while. And then we got to keep in mind, we're coming up on February quicker than it feels, and that's when we're going to be setting this spring crop insurance price, and that's when the real acreage battle starts, and we start to see what pencils better. And so most of that will be determined in the month of February before we get the March planning intention. So a lot of things coming up here in the next couple of months, and the market's got something to fight for here. So hopefully we'll see some fighting occur. We are seeing a little bit of acreage debate already, expecting a broad reduction in acreage. But like David Cruz and many of us have discussed numerous times, we're seeing a lot of prep work done, a lot of field work, a lot of anhydrous, a lot of fertilizer going down. This fall has been exceptional. I mean, can't even call it fall anymore. We're in winter, and we're still very workable weather, even up here in the Northern Corn Belt. So, it's been conducive to guys that are wanting to plant corn, and those producers that are on the fence. Maybe they prep for it, maybe they plant it, maybe they don't, but they've had plenty of time to prepare for it. So there hasn't been a lot to feed the bull here. And the old saying is bull has to be fed every day, and there just hasn't been enough there. So the corn's been a struggle, and probably will be for a little while until we see some more development in Brazil, or we start to hear some acreage rumblings that would be supportive. Keep in mind also, we've got USDA reports next Friday, the 12th at 11 a.m. That'll be a big deal.
All right, let's go over to soybean.
Yeah. Even worse.
The downhill battle, I feel like.
Yeah, when you think it can't get worse, then just go look at soybeans for the past little while here. Like I said, holiday shortened week, you only had 4 trading sessions. You finished the week 41 and 3/4 cents lower, a dime a day every day this week, and it's just been weighing on traders. You finished the March contract today at 1256 and a quarter. Exports still running something like close to 20% behind what would be expected this time of year for the marketing year. The dollar kind of rallied back over the last couple of days after breaking back lower. So you get this dollar rallying, but it doesn't matter because the trader focus is centered on this map of rainfall in Brazil. This is a 7-day cumulative total, and you have to kind of do some math on the fly when you look at this because it's in millimeters. So it's about 25 to an inch. So everywhere you see the light green, they're getting an inch or close to it. Some places an inch and a half. Then you get to the blues, you're talking 3 inches where you're getting the deeper blues. Up into the reds, those areas could be anywhere from 5 to 6 inches. So widespread 2-inch to 4-inch rains, and then a lot of pockets of an inch or maybe even as low as a half inch. But it has been broad, and this is just the past week. And it's been mostly in the last few days. So this is something that has been very impactful. And when you have the trade focusing on what Brazil is doing from a production standpoint, when you see something like this, it just really shakes the market. And that's why you drop 10 cents a day for a 4-day week here. So definitely not been very conducive to higher markets, but eventually enough's enough. We are at pretty reasonable support levels here. If we break much lower than this, we're going to probably check the 1240 area in that March contract, which is just 16 cents away. So we could go play with that on Monday. So hopefully we hold sooner than later. Any kind of recovery in the Brazilian crop won't be known for some time. So much of this was planted late because they were waiting for rain. A lot of it never came, but they went ahead and planted anyway. Those areas ended up getting replanted. So you have this broad range of plant dates. So it's going to be drug out as far as harvest goes. You may have some starting as early as the next couple of weeks, and others won't start until the month of March. So, it's going to take time to play this out and see what the actual production numbers look like before we can begin to wrap our head around what the longer term impacts are and how that should affect our markets for the remainder of this marketing year. China's going to shop there first, come to us second. But this setback should at least uncover some short covering. Technically, we are so far oversold. We should see traders start to take some short profit. They'll get a little nervous being short from these price levels, and hopefully see some recovery.
All right, let's talk about a little bright spot in the market, the cattle.
Yeah, I mean, I'm glad you said a little bright spot. It wasn't a shining beacon for sure. February, which is your spot month, did close lower for the week, down $3.10. But that was the only contract that closed lower, and that's just because it's tied to cash, and we're trying to sort out what's the cash going to do over the next 6-7 weeks. We started out the week with we started out the week's trade, which really didn't get going until Wednesday, with $2-3 higher cash. Then on Thursday, we had heard reports of late Wednesday sales, $5 higher in the dressed. So you're getting this anywhere from 175 to 178 live, 275 to 276 dressed. And that was broadly $3 higher than the previous week. And then today, I don't know what happened. 173 live in Nebraska, and we're getting some more 272 dressed. So that yanks us right back down to steady with last week and kind of takes away that euphoria that had been in the market. And I think a lot of that, depressed attitude within the cattle and making them want to just go ahead and cough up the cattle is because of a couple of things. One, you've got 942 pound average carcass weights, your record high on the carcasses. These cattle have just been packing on pounds because of that cooperative weather that we were talking about earlier. If they can get out there and feed and there's nothing adverse, their bodies aren't fighting conditions, they're just going to pack on the pounds. And that's what we're seeing. And the record high carcasses would reflect that. Then now here we are in January, we've moved past the holiday season. So the demand for the higher end cuts, your ribeye rolls and things of that nature have fallen off. And this is your choice box beef chart here. And you can see what's happened just since the first of the year. That's where that little ledge falls off to nowhere. That's only the last few days that we've dropped from 290 to 275. We did see a little bit of recovery today to end the week, but that was the midday reporting. That isn't confirmed and that isn't final. So we'll see. But I would expect that we'll see something a little closer to 277, 278 on those choice cuts to finish out the week here. But that's a steep decline, and that's coming into a seasonal time when you do see a decline. Normally it doesn't look like that. So we would expect a little broader shallower decline to the end of the month and then maybe start to build back from there. But those are the things that have been weighing, and this seasonal trend hopefully is shorter lived if it's going to be on this trajectory.
All right, let's wrap up with hogs.
That was your bright spot. It's kind of crazy to say that after what we've been going through in the hogs for so long. And, you know, you get one positive input and you get two or three negatives. And eventually the market just falls and there seems to be no hope. What happened was you got past these holidays where shoppers are looking for these prime cuts, bigger cuts. So they're shopping beef, they're shopping higher end beef. Now we're past that. We may see a little more value shopping, which should attract buyers to pork. And at the same time, you're seeing a little bit of recovery in the cash market, not aggressive recovery, but just steps in the right direction. And hopefully we can see that continue. But you finish the week out, February hogs up 202 at $70 even. And that was after testing some pretty solid technical support at 65 just this week. So we're $5 off the low for the week on a shortened week. Post holiday, we should see a little bump in the market here. So there's some things playing out to make us think that there is some upside in the hogs, and they sure need it. The hog producers, feeders need this little bit of rally if there's going to be one to be had. And I think there's cause to think that we will. And I don't think that what we saw this week, late week in the cattle, with that depressed cash that was just steady with last week, I don't think that's going to hold either. It's just a matter of timing, and eventually I think it'll come around. But these hogs can't stay that depressed forever. Although I will say, too, I was noticing today that the summer months were back up above 90. You get those pushing towards triple-digit figures, they're going to get hedged pretty hard. So need to be on the lookout. But there's still some upside potential here, I think, for the hogs.
Overall, I know grains did not have a bright week. It seemed like livestock kind of was the bright spot.
I guess overall I was a little disappointed just because we were the first week of the month and we had been kind of in a negative undertone leading into the closing of 2023. And the attitude was maybe we'll see some recovery to start next year. And so maybe expectations were a little too high, but I thought we'd see something a little better. Crude oil is recovering nicely. The dollar has shifted into a broader downtrend. We should be due for these commodity indexes to improve. And so there's cause to think that we could see some rallies here. And another thing to keep in mind is this is an election year and funky things can happen.
All right, that'll do it for this episode. Thanks so much.
All right, Brianna, have a good weekend.
You too. You can find us on Facebook, YouTube, and TikTok.